On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Raid and Arrow. We are back at it again with another Bag Talk episode. Today, I'm going to be giving my initial thoughts and impressions on a new position in my portfolio that you guys have probably seen me shift into or talk about. ULTY. We're gonna give my impressions, my history with it, what we're using it for strategically, because these things are tools and we're not just blindly yield chasing. Where it fits with my portfolio strategy and what I'm looking to do with it moving forward. Before we do that, before we get into it, let's talk about hitting that like button. Also, if you've been here more than 2 times, go ahead and formally join the Wolfpack. Hit that subscribe button. Hit the bell notification that's down there right next to it. Turn all notifications. Make sure they're set to on. This channel is pretty good about getting the information out to you, but, you know, having a channel that's shadow banned never hurts to reiterate that, like, you might want to check that. Lastly, for those of you who are in the Wolfpack, go ahead and share this video. You guys have been doing a great job. I'm seeing some of the videos are actually hitting pretty hard, which is awesome. Like, that's cool. That feels good. It's you get that feedback. Like, I got to a point where, compared to my old channel when I tried to do this content over there, because of some of the previous topics that were broached on that channel, it's shadow banned. So, like, I would do videos and like maybe 3 people would see it. And I didn't really feel great about that, but I kept doing it anyway. And then finally, I just decided, I was like, hey, I want to have a channel where I just talk about money, because that's all I want to talk about anyway. So that's kind of my thing. It's kind of what I want to do here. And so I made a channel that's literally topic focused. It's all back talk across the board. Now, it's not niche in the sense that I just do one thing. I'm talking about my journey, so all the things that are touching it. But, you know, I started getting regularly like 20, 30 views, and like now, and then I had a couple that hit. I know you guys love it when I talk about msty. There's a definite cult of personality / following with that position. And so I do talk about msty a lot. I love it. I like it. I want more. Well, I'm not buying more of it now, but we talk about a lot of different types of stuff over here in the financial under the umbrella of finance. And it's basically the stuff that your working class stiff, your blue collar, some semi-white collar, average Joe is going through out here in the financial markets. And I'm just documenting my journey because I am exceptional. Actually, I'd probably say per my salary and my W-2, if we were to just take that, I am bottom end of average, towards the bottom. And definitely on the bottom half. Like, I'd say we're like in the middle towards the bottom. Middle bottom. Not anything special. It's not like I have an extravagant lifestyle. I have a whole bunch of money coming in, because I don't. Then if you just took my passive income, I'm a flat brokey. Like, I'm broke by everybody's salary definition. Now, I don't necessarily ascribe to that, because dollars are garbage, and it doesn't matter how much you make if the currency is being debased. Like, it just really doesn't. So, you know, I kind of am only focusing on my passive income. So we talk a lot about the passive income strategy. You're going to see a lot of conversation around the moves that I'm making, the debt tools that I'm initiating, my thought process on using leverage for this space, because a lot of people just start out using leverage. I don't necessarily agree with that. And just using debt. I'm actually probably gonna do a debt tool episode. Let me write that down. Writing it down right now. Debt tool break down. Gotcha. Bam. It's going to be an episode. So we'll be doing an episode on debt tools and stuff like that. But we started having some hit. Like I've had a couple of them that have gone over 1,000 views, which is crazy. Recently I just had one. I looked up, been like a day, there's 600 views, and I'm just like, yo, like, cool. Like, okay, cool. So I know I'm going down the right path here. People actually want honesty. I'm not curtailing the content to the algorithm, which a lot of people do that live here. I don't live here. I'm not paid to be here yet. So this isn't a job for me. This isn't even a source of income because I get nothing for these videos at this juncture. The reason we're fighting so hard to get to 500 so that I can start getting some change or something, like give me a couple of bucks. That'd be nice. A couple of dollars for old Reckless Ray and Arrow. I sure could use them. So we're going to go ahead and keep it moving, keep it flowing. I'm going to pull something to the screen here because I've decided that as we do these breakdowns, I want to go ahead and get the fluff out of the way. So first and foremost, I'm going to pull to the screen. We're talking about ULTY. I'm going to give my little history blurb. Then my history with it. Personally, my personal experience. I've been doing this for 12 months, so I am an authority now. Okay, guys, I'm an authority on high yield dividends. I think I'm pretty good at it. Against popular belief, like not starting out with being able to just throw hundreds of thousands of dollars into this. And honestly, if I had hundreds of thousands of dollars, I would probably just buy Bitcoin, because if you have hundreds of thousands of dollars just laying around, you're already rich. So like if you're trying to stay rich and you're already rich and you have large numbers, like Bitcoin's way better than adding more dollars to a burning dollar building when you have all the dollars already. It just doesn't make sense to me. Mathematically, it just really doesn't. It does not. So we're gonna just keep on flowing with that. Like I'm like, yo, like if honestly, hold on, let me think about this real quick. Like this is just a spitball strategy. If I was already rich, and I'm gonna throw this up on Reddit for those of you who are already rich, and I got hundreds of thousands of dollars, and I can just throw them around because I'm already rich. Look at me and my rich and my brokerage. Okay, so the already rich guys. Not financial advice, because I'm a brokey. What do I know? What I do know is I know financial math real well, like real well, because I'm broke. So like I gotta make those shekels count. All right, every last one of them. I'm accounting for pennies over here. If I already had hundreds of thousands of dollars to throw around, what I would do personally, if I was in your position, I could go, okay, once I could laugh like that, because that's how you laugh if you have hundreds of thousands of dollars. If you didn't know, they might not do it around you, but behind closed doors and amongst themselves, when everyone's got hundreds of thousands of dollars to just throw around, that's the laugh that they do. I've heard it from through the door one time when I was waiting tables. So that's kind of, so I'm gonna tap into my inner and let you guys know what I would do if I were you. What I would do if I were you is I would take my hundreds of thousands of dollars. Okay, just work with me here. I would buy whole Bitcoins, like at least 1.5 Bitcoins. Okay. And then what I would do is I would take those Bitcoins and I would probably just buy them on the Strike platform. And I would take that Bitcoin that I have on Strike. If I really wanted to put hundreds of thousands of dollars into ULTY, I'll put a little bit less into ULTY. And here's why. Because you could take your Bitcoin that you bought for hundreds of thousands of dollars and you put it on Strike, right? So you buy it over there and you got it sitting there. What Strike lets you do is it lets you borrow against your Bitcoin. So where I'm at, the minimum you could borrow is 1.3. It's like 1.3 something. And I would take that and I would get somewhere within the minimum range and the maximum range. If you've only got hundreds of thousands of dollars to throw around, there's a different laugh for people who have all the money in the world to throw around. And that's not you with your hundreds of thousands of dollars. That's someone else, because there's levels. There's levels. And see, the level where I'm at, I'm on like the ground, a little bit above the ground level. So I got to listen to y'all laugh through the door. Like, you guys probably know what the laugh is for the people who got billions of dollars to throw around, and I've never heard it. So I can't speak to that, but I know your laugh. Hundreds of thousands of dollars to throw around. So like, I know what the millionaire and the multimillionaires laugh like, because I can hear you through the door, because I'm on the other side of it. I'm like coming up the stairs and I hear you guys partying up in that room, and I'm on the way up the stairs, so I know what the laugh sounds like. But you guys probably are on their way up the stairs to some different rooms, and so you might know what their laugh sounds like. But needless to say, the maximum Bitcoin that they'll let you leverage against over there is outside of both of our pay grades at this juncture. May we find out what that experience is like, though, because I do want to know what two rungs up the laugh is. I do want to know. And I would leverage it. I would take a loan against it, because you don't pay taxes for loans against an asset. And I would take that money and put it in Ulti, and then, go get on Reddit and flex on all of us brokies in there about how you just threw hundreds of thousands of dollars in there. But like, you would also be secured for your future, instead of just like churning more dollars in a burning dollar building, so that way you could have more dollars. Like, it just screams boomer. And I'm not boomer shaming. I'm just saying that, like, you guys are going to be on the wrong side of this wealth transfer, because we're extracting the wealth from you via Bitcoin every day. So that's what I would do. But back over to Ulti. So my experience historically with Ulti was, originally I had yield chased into this position, and it was okay in its original iteration. Now, I was there before the remodel of Ulti. They took this pig, took it into the back room. It's kind of, you guys remember RoboCop? If you haven't seen RoboCop, I highly suggest you see RoboCop. It's a cult classic. Like, you should understand. Dude tried to die, and they made him go to work anyway. It's crazy when you think about it. But it's a good movie. It's a good movie. I enjoyed it when I was a kid. I even enjoyed the updated version, because they did a couple of updates. They have a few very old ones, and those are canon. They're classics. Then they did an updated one. That was really good too. That guy tried to die, more modern graphics, still made him go to work. Like, you can't even call in dead. It's craziness. And we're trying to get out of that vicious cycle, because like, I don't want to be RoboCop. Like, that's crazy. So the dude had a horrible day at work, and then still had to go to work the next day. Like, that's wild. Okay. And then I don't even, like, he never got a paycheck when he was RoboCop. So like, not only did he not get to like not go to work, he went to work for free after that. Also insane. So now you a cop slave. That's wild. We're making up new words. Cop slaves. They exist apparently in the RoboCop universe. So I got into this position. It went haywire, ended up working its way down to a reverse split. It was a case study for NAV erosion, actually. It just eroded down until they had to reverse split it. And a reverse split is where they have to they don't have enough money in the fund, so they have to bolster the shares, because they can't keep paying out, because it would actually go to zero. Like, it's just it's the last ditch effort to save a horribly managed fund. And what they did was, Ulti tried to call in dead, because it had died. And they took it to the back room, hacked it up, remade it in a better, more robust, strong version. Enter new Ulti that everyone's talking about on YouTube right now, because it's all the rage. And they never talk about the reverse split days, where it was just NAV eroding to death. Like, it's wild to me. But the version that they came back out with apparently is very NAV stable. It stays within a window. The window is very low, which I'll put on there on my concerns on the back end, but it's consistent. So I've been watching it, saw it hit the YouTube algorithm spree, and I'm like, and so I started like looking at it, testing it, because I'm a numbers person. I can feel how I want to feel about it. But I'm like, yo, if it's working, I'm going to use the tool for what it's meant to be used for. If it can help me accomplish my goals, I'm going to use it. Like, fine, whatever. So, looked at it for a couple of months, saw all the YouTube videos, and got in the comments and reiterate it every time. I'm like, you guys know this reverse split, right? Like, we're gonna act like that didn't happen because because of where we're at, and the people ignored me or just wanted to act like I was a Debbie Downer. And it's like, no, I just invested in it longer than you have. Like, I'm sorry. Like, I've been around. Like I said, 12 months, I'm an authority. So like, I finally got to a point to where like I was testing, and I have a portfolio that was previously just dedicated. The Robinhood portfolio was just dedicated to weeklies, and it's hard to find good weeklies like that pay anywhere near what I can get with monthlies. Like, my monthlies are strong, like they strong. We get good pay off those. The weeklies, like it's like getting past freaking $20 is like you gotta fight tooth and nail. And Ulti kind of fit that bill. I'm like, we can get some money going here. We can at least see some numbers. Because, like, for me, I like to see the numbers roll up. It makes me feel good. Like, I like seeing those, like, $1,000+ Ulti check or Misty checks come in. I don't know. It just makes me feel good. Like, watching $20 or $10 or $5 trickle in weekly don't hit the same for me. I'm just like, okay. But Ulti gives you the ability to you can put some numbers on the board in a weekly fashion. And it's like, there is an end game where you can be in the realm of like $100 a week. And $100 a week, interesting to me. I'm like, that's a good number. I like it. I got paid this last Friday that I was recording this. We got $50. Felt good. I was like, well, okay, 50 feels good. 50 feels good. That's $200 a month. Like, okay. Gives you something to play with during the interims. And so I got back into it. And what we're going to do is we're going to break down my initial thoughts and what I've got going on with that. That's interesting. Okay. So we're going to go over the first thing I want to do is I want to break down the details. So we got to talk about the fund strategy. What is their fund strategy? The structure of Ulti is they invest into 15 to 30 underlying US stocks selected mainly for their high implied volatility, which is awesome. That's how you make your income. Great. Which tends to produce higher option premiums. Also true. IV is vitality. Yeah. Volatility is vitality. Michael Saylor said it best. The goal being income generation. The fund continuously writes covered calls on these stocks, collecting premiums to produce regular monthly distributions. Also awesome. Dynamic selection. They have a dynamic selection based on the amount of stocks that they have access to. So the managers have a broad discretion to swap the underlying holdings to seize the best available options income opportunities at any time, allowing for nimble adaptation to market conditions. Love it. Sounds awesome. Now, the risk profile. While the gains on the underlying stocks are capped due to the call writing, Ulti is exposed to the full downside risk of the stock's decline in value. So you got limited upside, all the downside, and that is the price that you pay for income. That's the reason I tell people these are not growth products. It's crazy, right? That a product made to provide income isn't going to grow as good as the underlying. Now, Ulti is a diversification play, which is cool. So like they're not trapped within one stock. So if the stock tanks, like if the stock market tanks, Ulti's probably taking a hit if all markets are tanking. But they have a broad distribution. So even when the market goes down, not everything necessarily is going down catastrophically. So even when it's like moving, it's like we see some drastic moves on Misty because it's tied to one stock. And if that stock moves drastically, we move drastically. Ulti is not like that. Like they could have a position that's sour, but it's not all of them because there's 15 to 30 of them. And if you got like 5 that are bad, but like 10 that are good, like you all right. Or if you have 10 that are kind of taking a hit that day and 5 that are just superstarring, still kind of good. It's pretty awesome. That's the power of diversification, which is a wealth preservation tool. It is also a NAV preservation tool. So that's pretty interesting. The things I like about it, obviously, the high monthly income. Duh. Risk flexible management. They can pivot. So if something's going south and they find a better option, they can shift out of the thing that's losing and then get into another winner. In my opinion, as a brokey who can only do basic financial math, you would think that like you let your winners run and you clip the losers and replace them with more winners, right? So like you're constantly shifting through and you just got a bunch of powerhouses in there. Pretty awesome. The diversification obviously is another piece of it. Protects the NAV, keeps it pretty stable. And then it's an adaptable fund. I do find that interesting. And I think that as we move forward, those who have the skill will shift into something of the like as far as having a potential strategy, because what Ulti's done since they robocopped it and made it come back to work, it's been working. It's been working real good. So let's go ahead and jump through the deets on here. So the distribution rate, we're at 84.23%, which is higher at present than msty, our baby, our Lord and Savior msty. Which is, it's pretty interesting. You know, it almost makes you want to do that ultimate swing and just put all the money into Ulti and then buy back into msty or something, because prices are low. So for me personally, like I couldn't lose on that deal, because if I just did that and then came back every week and was like, hey, I'm just going to buy a chunk back into Ulti, like that could be a strategic play in the future, depending on how this goes. But we're going into a bull run, and I got faith that Ulti's going to come, or msty's going to come roaring back. But for a weekly, this is a strong weekly, man. Like, I think it might be one of the strongest. Like, it's performing really well, especially while staying in that range. So let's take a look at the NAV. Is the NAV eroding? I'll say this every episode. NAV erosion is when it goes lower than launch price, not lower than when you bought. Those are two different things. That's you bought at an inopportune time. Is there an inopportune time to buy for a income fund? I don't believe so. But what you are experiencing on a personal level is you bought the peak and then the price went down from the peak. The NAV is not NAV erosion, just so you know. Just so you know. Just so you know. On the 1 month, we are looking at a positive 8.73%. On the 3 month, we are looking at a positive 27.18%. And on the 6 month, we are at a 9.31%, which also is our year to date amount that we are up. And then 1 year, it is 16.24. And then since inception, we are annualized at $5 and annualized at 5.27, which is awesome. Since inception cumulative, we are at 7.11. Good. No NAV erosion. Very tight window. I like that. We're going and we're looking at the payments. Look down here. Oh, we had some over 10-cent payments. This is nice. So it's looking like since they redid this, I'm going to say, let's see here. So since they redid it, we've been around in the realm of 10 cents. It's like 10 cents. Let's see. What's the lowest we've gotten out of it? It looks like it's between 10 and 8 cents. You're either getting 10 cents or you're getting 8 cents. Like it's 10, between 10 and 8 cents. Like that's a very tight range. It's been very consistent since they redeployed. Very. I think that's awesome. I mean, it's the consistency for me. The price range, pretty consistent. It got up to what was it? I saw it in the 640s last Friday, or this last Friday. Obviously, before I'm recording, this is going to be a little bit after, but I'm looking and I'm like, yo, this is very consistent. I like it. I like it. I'm gonna bring me back to the screen. Actually, what we'll do is we'll do this so that way. Oh, I don't want to be that big though. I don't want to be that small. What else we got? Oh, I don't like that either. Why is it like this? I don't want to be the same size either. I don't want to be up in that corner either. Like, oh my god. Okay. Ugh. We'll just do this one. This is fine. This is fine. We'll do. I don't like it. I don't like it. I don't like. We'll do this. We'll just do this so that way you guys can. Those of you that are watching can just like look and bask in the ulti glory, and I'm just gonna give my spiel on it. So my personal thoughts and opinions on this at present, with what we're using it for at present. And I am watching this personally like a hawk. Like I said, I am giving them probably about 10-15% of a drop on the NAV for where I'm at, and I will cut bait. I'm not going to sit here and act like I have the ultimate faith or that they've built the ultimate thing and I'm just going to ride it to hell or high water. I'm not. That's not me. msty, different conversation. I'll ride that one for a little bit. And you know, if I borrow against it to bolster my ulti position, we'll see. I will buy back in because it's going to lower my average cost on it. So there's that. But I just don't, for me, I am not seeing where I am not a long-term holder for this unless it stays performing. Like if this doesn't perform, it's getting clipped. Like I don't have a feeling because I don't understand the underlying. There's just 15 to 30 random stocks that get cycled through based on IV. Like I'm not going to ride those waves. Like I'm not going to take that hit. Like I'm going to dip at 15. And if we drop to 20 or 25, I might start dollar cost averaging back in. And I'll shift that over to something that I understand that I'm willing to ride through a low market like msty, imst, anything that's MicroStrategy related, probably anything that's Robinhood related. I could put it in hooy. There's a lot of stuff that I'd be willing to, play the game with. And in doing so, I would shift into something that I'm like, hey, this is down, but I'll take that payment over this whatever show we're gonna have. Because the show that we previously had was a clown show, and if we get into clown show territory, for me, I'm like, hey, I'm not gonna be holding it. Now, how does it fit into my strategy now? It's a strong weekly. That's exactly how it fits. Like it's one of those things where it's like, as we're moving forward and as we're getting positioned for things, like I like this for a fill weekly for right now. And honestly, it's going to be my go-to fill weekly for most things. Like we're getting ready to condense the Robinhood portfolio down into this as the weekly. Like I would just rather have everything sitting in this right now and then get that position solidified for that portfolio. Our target metrics are $400 a week for the weekly, and then matching that with not $400 a week, $100 a week, so $400 a month for the weekly, and then $400 a month for the monthly that's tied to it, and then we'll move on to the next positions. And that's basically 1,100 shares would put you in the range of like, hey, you're getting 400 a month, you're getting 100 a week off this, and move on from there. For me, that's the way that I'm utilizing ulti. We're going to also be implementing a similar strategy with probably higher numbers in the income portfolio. So the numbers over there, I would probably be aiming for around $250 a week. So I want at least $1,000 a month off the weeklies. And then the opposite side of that would be putting it on, what's it called? Putting it on so it'd be $1,000 a month for the weekly, and then my positions for the monthlies are basically to get me to $2,000 a month, roughly. And then, if you're cycling that, you use the weekly to buy the monthly, you use the monthly to spill back into the weekly. That's provided you're not using those portfolios for anything else. So for the Robinhood portfolio, I'm not tapping into that portfolio for anything right now. So that's a possibility for that portfolio specifically. The high yield income portfolio, I'm kind of relegated to the stipend for reinvestment that we're moving into in August. And so we have the August stipend, or the bare minimum stipend that we're doing for reinvestment while we're paying off the debt. But we are also have money that flows into that portfolio. So we're kind of in a space where all we have available, basically, we're in a small, narrow margin. So I can't do that style wheel strategy over there. I can do it in the Robinhood portfolio, and we're getting ready to condense down to start that experiment, which is going to be pretty interesting. So we'll probably be making some plays on Monday, doing some buys, and then moving forward and progressing with that. And that's kind of where I'm at with it. Like, we're going to use it, but we're watching it. Like, I watch it like a hawk. Like, I love that it's been proving me wrong. Like, punch me in the face, Ulti. I'll take it because you're paying me while you're doing it. But I am watching. I'm like, hey, there's only so much downside I'm willing to take from you because, like, I've rode you to hell and back before. So, and as somebody who has actually invested in Ulti during that time period, like, I've seen how once NAV erosion starts going rampant, how it can just destroy a fund. And the other thing that I'll say is Ulti's the only one that's come back. Nobody else has learned the lesson. They just reverse split and they're like, we're going to keep doing what we're doing and hope it gets better. And like, the payout sucks after that. It never gets better. You basically have to RoboCop a fund that reverse splits. Ulti is proof of that. Like, if you take it to the back room, hack it up, add some cybernetic parts, get it a gun holster that's actually its leg, but it's also a gun holster that pops out so that it can fight crime more effectively and make it bulletproof, then yes, you can come back from a reverse split too. But the only company that I've seen do that is yieldmax. And kudos to them for that. Like, they're really good in the space that they're really good at. I think that they're gonna run into some walls playing in the crypto space with those crypto stocks. I don't think it's as simple as they make it out to be. But for everything else, they're my guys. They are my guys. So you guys got to let me know down in the comments what you think. This is my take on Ulti, my experience thus far, how I'm using it, what my thoughts are, my perspective on it. Like, I understand that most of the other content creation that I've seen, they're just all about it. It's almost like they're not giving honest opinions about things, and they're paid to promote stuff because they leave out the bad stuff and only talk about the good stuff, and they're not giving an actual opinion. But since I'm not getting paid, I'm going to tell the truth. And I'm like, hey, it's awesome right now. It's reverse split, and I'm keeping my eye on it, and I will dump my position at 15%. That's my stop loss. Like, that's just, I'm playing it, and that's what I'm willing to give up, because total return, if things go bad, I feel like we're going to have a good summer ahead of us. Things go bad, I'll be even. Like, that's basically what we're doing. You bolster it up, and then, like, a little bit of house money. And as soon as the house takes their money back, I don't want to play anymore. Give me my money. I'm leaving. That said, I'm really excited. So expect to be hearing more about it. Expect to see it in more places for me. And yeah, that's all I got for you guys for this week. It's been awesome. Don't forget to hit that like button if you've been here more than twice, or you're getting value out of these episodes, or you like my breakdowns, or you like me randomly ranting in this room by myself. Go ahead and hit that subscribe button and formally join the Wolf Pack, because we're not trying to get rich over here by ourselves. Also, don't forget to hit the bell notification. Make sure it's set to all on. I don't flood your feed. I promise. I'm not one of those. I'm not even a content creator. I'm not good at this. I'll be the first person to say I'm not good at my job. Like, it's great. It's because it's not a job for me because I'm not getting paid. So obviously it's like a vicious cycle because it's like, I'm not good at it. I'm not getting paid. It's not my job. Like, so yeah, that's a cycle that we're in. But hopefully you guys are getting something out of this, maybe getting some thoughts. For my people that are already subscribed and in the wolf pack, go ahead and share the video. And yeah, I'll see you guys next week. This has been another great bag talk, getting ready to go into bag fortification Fridays. Hopefully it gives you the motivation you need to make some different decisions when that money comes in, because we're all in the same boat. Everybody gets their little W-2 check for most of us. The differentiator in where we end up, though, is what we do with that income that comes in. And it's going to be the same conversation for those of us in this high yield space. There's going to be some differences between the guys that just want to stack dollars indefinitely and those of us who actually have a strategy and a plan beyond just, I need to get as much income. Look at how much income I got coming in. Passive income, passive income, passive income, passive income. There's going to be a difference for those of us who are actually managing the cash flow versus those of us who are just licking windows and stacking for the sake of stacking cash flow. It's going to be a difference in outcome. It's going to be a big difference in outcome, actually, depending on what strategies are implemented. So with that said, I'll be back next week with another gym-packed episode of my thoughts, opinions, and things that are ongoings in my financial world. We'll see you next week, people. Till then, it's your boy Reckless Ray De Niro, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.